All right, let's pull back the curtain on one of the most powerful, fastest growing, and, let's be honest, kind of mysterious financial products out there right now, the zero-day option. You've probably seen it, right? That last hour of the day, things just seem to go haywire. Sudden spikes, sharp drops. It's like a whole different market. Well, what if I told you there's a very specific and very powerful reason for all that chaos? And just look at this. This isn't some small niche strategy we're talking about. This is an absolute explosion. An invisible force has quietly grown to dominate the market's daily activity. And as you can see from this chart, it happened incredibly fast. So what exactly is this force? Well, let's dive right in and unmask the culprit behind all that end-of-day craziness. And there you have it. The reason for all that volatility is basically a financial bet that is born in the morning and is completely gone by the time the afternoon bell rings. So now it's time to get down to brass tacks. What are we actually dealing with here? What in the world is a zero-day to expiration, or as you'll hear it called, a zero DTE option? To put it simply, it's a super high-stakes bet on where the market will go today. You buy a contract that gives you the right to buy or sell something, like the S&P 500, at a set price. But that right completely vanishes at the end of the trading day. For this kind of trade, there is literally no tomorrow. And check out how huge this has become. We're talking nearly 60% of all S&P 500 options volume is now in these same-day contracts. This isn't just a piece of the market anymore. On a lot of days, it is the market. So we get the what, but what does it actually feel like to be in the middle of one of these trades? Let's zoom in from the 30,000-foot view and actually follow the life of one single zero DTE trade. The whole thing happens in just a matter of hours. A trader wakes up, checks the morning news, and decides, okay, I think the market's going to rally. They place the trade. But that's when the real work begins. You're glued to your screen, watching every single tick, every tiny little move, because you have to get out before that closing bell. There are no do-overs. And this brings us to a really critical point. A zero DTE option is like a melting ice cube. Its value isn't just based on the market's price, it's also based on time. And with every single minute that ticks by, a little piece of its value just evaporates. Forever? This is the first opponent every zero DTE trader is up against. Time decay. The clock is never, ever on your side here. Its value is literally disappearing as you sit there and watch. The second big factor is extreme sensitivity. Because that timeline is so squished, even a tiny little flicker in the S&P 500 can cause a gigantic percentage gain or loss in the option's value. It is leverage on steroids. And that, of course, brings us to volatility. You know, it's a real double-edged sword. It's what creates the chance for those lightning-fast profits, but it's also the very thing that can wipe out your entire position in a matter of seconds. And finally, there's speed. This is a game that's measured in milliseconds. Regular traders aren't just competing against each other. They're going head-to-head with institutional algorithms that can execute trades faster than a human can even blink. Okay, so we've seen what a pressure cooker it is for just one trader. But now let's zoom the camera back out and see what happens when millions of these trades are all happening at once. What's the ripple effect on the entire market? It creates this really fascinating chain reaction. See, when you buy a zero DTE option, the big institutions on the other side of that trade, the market makers, they can't just sit on that risk. To protect themselves, they have to immediately go out and buy or sell the actual stock. Now, multiply that simple action by millions of trades. All of that forced buying and selling creates these powerful waves of pressure that can literally steer the market. And that is exactly why we see those wild, volatile swings right before the closing bell. So this brings us right back to the individual trader who's standing there facing this massive, volatile system. What is the real trade-off here? Well, it's a high-wire act, and there is no safety net. The two sides of zero DTEs are perfectly captured here. I mean, the lure is powerful, right? There's no overnight risk, and you get huge leverage for a low cost. But the reality is just as intense. You can lose your entire investment in a few hours, with absolutely zero time to recover from a bad trade, and you're doing it all while competing against super sophisticated high-speed trading bots. Ultimately, this is a game of psychology and pure discipline. When that closing bell rings, your profit or your loss is permanent. It's locked in. There's no rolling a trade to the next day, no hoping for a comeback. The slate is wiped totally clean, for better or for worse? And that leaves us with the big question. This high-speed, high-stakes game now completely dominates the daily volume. So, is this just the next evolution of financial markets? Is it a permanent feature of our new, faster world? Or is it a bug, a source of instability that could one day break the very system it now defines?